morning and welcome. This is NDTV Profit. You're watching Ask Profit. My name is Mathew and with me is Smriti Chaudhury, and we will take you through the next half an hour or so of trade. Now, this show is geared towards getting you answers to all of your stock-related questions, whether they're short-term technical-based questions or long-term portfolio fundamental-based questions. You can send all of them to us on that number that you see at the bottom of your screen, and we will take it up over the course of this half an hour. Let's first take a look at where the markets are right now. And you have the benchmark indices that are trading with cuts of about 0.25% or thereabouts, but much sharper cuts in the broader end of the market. And you've seen quite a bit of chop and churn today. You've seen the mid-cap index that is down about 1.4% or thereabouts at this point, and you have the small-cap index that's down more or less at that same level. So understandably, therefore, the market breadth tilted in favor of the declines. Take a look at some of the contributors on the Nifty 50, and you have TCS and Infy that are gaining ground. IT seems to be getting a bit of a fillip based on what we've seen. Of course, Infosys results today, and that result, as well as the commentary, will likely give you some more understanding of whether or not the green shoots that some companies have spoken about are actually visible to Infy as well. So that should give you an idea of how the IT pack will do. You have HUL that is also gaining ground, but among the losers, you have a couple of heavyweights that are leading the pack, and you have Reliance Industries, which is losing, as well as HDFC Bank, Bajaj Auto also among the losers. Most sectors are currently in the red, led by the media index, which is down about 4% right now. Realty is also losing ground. Metal over 1% lower. Auto as a pack also underperforming. IT as a pack is the outperformer in trade today, as I pointed out, and not too far behind with gains of about 0.5% is FMCG. But let's talk about Asian Paints that we've selected as the focus today, because you had the earnings which were a bit of a disappointment, but more importantly, you had commentary with regard to pricing and the outlook going forward. The management saying that it will have to undertake pricing because of the kind of pressure on inputs. And of course, that is a complicated scenario as well because of the competition that is emerged in the space. We're joined by Mahima at the start to give you some perspective on why this is an important stock and a space to track. Mahima, it's a negative result, and also the outlook does not look incredibly positive. What can you tell us about the latest?
Absolutely, Alex. So I'll just give a brief about how the numbers were, where revenue was down around 2%, margins have taken a hit of almost 500 basis points, and net profit was down around 25%. Now, a couple of things, the revenue was down 2% despite the domestic decorative volume growth was around 7%, and the revenue drop was led by adverse product mix as well as impact of price cuts which were taken earlier. The price hike was announced later in June 22nd, hence Q1 has been impacted by the price cuts which were taken earlier. Secondly, the entire margin aspect, the margins have taken a significant hit on account of higher employee cost as well as the higher OPEX, and this has led to EBIT and PAT decline of 20 and 25% respectively. Now, talking about the stock, well, the stock did touch an intraday low of almost 5%. However, it has recovered from there, and this is because there was a significant short build-up seen in the past 3 days. The open interest of 1 year high at around $580 million, and max call put open interest was at around 3,000 to 2,900 strike, which is why people have now sold their put options and made profits today, and which is why the stock has recovered from its day's lows. Now, in terms of what the brokerages are making out of Asian Paints, well, Citi has reiterated sell with a target price of 2,400. They expect 8% gap in volume versus value in near term, which the management, by the way, has guided between 5 to 6%. And they're saying that the margins will continue to be under pressure because of competitive intensity, and they expect to see impact by Birla Opus launch in the entire industry. JP Morgan has also cut its target price to 2,800, and they're saying that the company's success largely depends on the premium segment, and they expect negative share price reaction and intensive competition will threaten margins. And lastly, Jefferies on Asian Paints has also retained underperform on Asian Paints with a target price of 2,100. What they've said is that infra demand is subdued due to elections, and they've cut EPS targets by from FY25 to 27 estimates by 1 to 7%. And they're also saying that the valuations for Asian Paints, which are around 50 times in terms of PE, look expensive. So this is the overall reason why the stock has been under pressure, and yet it has recovered from its day's lows.
So much, Mahima, for that. And on that note, let me introduce you to the guests for today. We have Shahina Mukadam along with Kush Bora joining us on the show today. Thank you so much to both of you for taking the time out and talking to us. Shahina, coming straight to you on Asian Paints, Mahima has broken down all the reasons how the stock is reacting, why we're seeing a little bit of a recovery there. Now, that's mostly because of the technical reasons. But let's talk about fundamentals. The management commentary seems to be slightly more positive than it was in the last quarter. From that, there's competition playing out. There are macro reasons as well. How are you seeing this in the longer term?
I think the biggest issue out here is the pricing pressure that is likely to continue on going forward, given the fact that there's huge competition that is going to come in, that has already started coming in. You have large, very well-established players in terms of their retail network that are now going to be competitors. So that is the biggest, I think, negative in my view going forward. Second being the valuations. Your analyst has already said it's a PE of 50 times, which is expensive. Even on a EV by EBITDA basis, it's like, 33, 34 times, which is very expensive. So any negative news that comes, like we've seen now, sees a correction in the stock price. Having said that, I think, investors can keep it on their watch list. And if you want to enter, then maybe you should look at dips over maybe a couple of quarters down the line. If you're already holding it and it's in a long-term portfolio, it's been a performer if you look at it for a very long term period. So investors can continue to hold if you're a very, very long-term investor and you've been holding it.
Okay, fair point. All right. Let's jump straight to the queries then. And we've got several that have already come in. The first one I'll take to you, Kush, and this is on Godrej Agrovet. We've got a viewer that has, Hari Om has bought at levels of 598. He's got 225 shares. The stock is currently trading above 800, though it is down in trade today, down about 4%. He's asking if he should book profit or should he hold?
Hey, hi Alex. It's such a pleasure to be here on the show with you. Hello, Shaina. Well, first let me congratulate Hari for this stellar trade. It takes a bit of courage, I must say, because the stock's actually given a vertical rise. If you see on the daily and the weekly setup, he's held on to this for the most part. Now the stock's actually starting to turn a corner because it's on the overstretched territories on, as I said, the daily and the weekly time frames. So some profit booking is warranted. My suggestion is to take some money off the table, so sell partially. Hold the rest with a stop loss of 780, 785 kind of levels. If that is broken, then you should perhaps take the entire money out. For now, book it partially, hold the rest with 780 as your stop loss.
Kush, the next question is the counter easy trip planners. The question is coming from Sriram, who's writing in from Hyderabad. They bought the counter at a price of 48, which is quite elevated compared to what it's currently trading at. It's been nothing, even if you look at the longer term charts, it's nothing but in losses for the last 1 year. You look at the YTD chart, you look at the 1 year chart, and even the 5 year chart, it's down mostly. What should somebody do, and what are the key levels you should watch out for in this one?
As painful as it might be, it's not a bad idea to book losses because there are a lot of other opportunities that, you might miss out on if you hold on to a stock which has, as you rightly pointed out, not done anything for the longest time. Even the near-term indicators aren't really as encouraging. The stock is trying very desperately to hold on to these 40 kind of levels. For the past few sessions, we've seen that attempt, but I'm not sure if it's going to be entirely successful. If you still want to, give it a shot, see if it just, gives you a dead cat bounce and perhaps exit at a slightly higher level, then 38 to 36 is the zone. This is where you should have a very strict stop loss. But my first suggestion would be to exit out of it.
Okay. Exit is a call on easy trip planners. योगेश पांडे मनावर मध्य प्रदेश से जुड़ रहे हैं हमारे साथ एंड ही इज आस्किंग अबाउट आईसीआईसीआई बैंक. ही इज बॉट एट 150 और वो पूछ रहे हैं शाइना कि इसमें लॉन्ग टर्म टारगेट क्या होना चाहिए.
I believe यहाँ से आपको another 150 rupees over the next 1 year आपको मिल सकता है. Basically banking has consolidated, आपने देखा होगा in some time, last couple of months, and मुझे लगता है कि ICICI बैंक यहाँ से आपको 1400, 1450 का आपको 1-1.5 साल में आपको मिल सकता है प्राइस, which for a large cap bank, large cap company is very good. काफी अच्छे उनके valuations है compared to the rest of the pack in terms of private सेक्टर. तो आप अगर इन्वेस्टेड है तो होल्ड कीजिए.
All right. Shaina, the next question is on CIE Automotive. This question is from Dinesh, who's writing in from Noida. They say they have accumulated 220 shares at an average price of 605 rupees in this counter, and they want to accumulate up till 1,000 shares. Now, they say they're a long-term investor. Now, for somebody who's been holding on to shares from, it's pretty much the level where it's currently trading at. What's your long-term view, and if you have any targets on this counter as well?
यहाँ से मतलब I think the long-term view is very positive. The auto segment, especially the auto ang segment, is likely to do should do well going forward. I would give a target, let us say a near-term target, 6 months target of close to about 640, 650 type of levels. Maybe within the next 6 months to 1 year, and definitely from there you can review.
All right. Just to say that this is, of course, an English channel. We do take most questions in English, but I can personally answer questions or ask questions in Hindi as well as Marathi if you do have them. I might just struggle with Malayalam though. Anuj Dhamija is asking this next question. He's writing in from Saket in New Delhi. I'm hoping, Kush, that you can help him with this. It's IRM Energy. This is a stock that is currently trading around that 460 mark. It's only market capitalization of 1.9, so 1,900 crore or thereabouts, and he's bought at levels of 496, which is above the current market price. What are the short-term levels that you would watch out for?
Alex, just to add to what you already mentioned about the languages, China's already very, very fluently answered it in Hindi. That's the best even I can do. Marathi, Gujarati, slightly out of scope, if you don't include grammatical mistakes. So that's, English, Hindi perhaps goes. As you pointed out, IRM Energy, again, not a stock that's, very actively traded or tracked, but really hasn't really done well. I mean, there have been spikes, but those spikes have given way rather fast. And now I know he's in a bit of a loss, but not a deep one, I would say. So my suggestion would be to perhaps exit out of this. We aren't seeing any kind of recovery signs. The volumes are also thinning. Perhaps, exit out of this, consider an alternate stock, at least the ones that are, trending higher. So this one's not going anywhere.
Okay. Let me take this next one because there's an update today on HOEC, which is Hindustan Oil Exploration Company. And this is a question coming in from Shabir Surti. Shahina, I don't know if you've seen the latest update, but it has to do with exploration and the possibility of a find that they might have and whether this will pan out. He has bought at levels of 110 and he's asking whether to hold on to this one. What would you suggest?
I would suggest he continues to hold on. I think the developments in terms of news flow is likely to continue to be positive, with the government likely even in this budget give incentives to oil and gas exploration. So I would say that you can continue to hold. So in terms of even valuations, it is not that expensive. It's a smaller company, so one can hold and look for better returns going forward.
All right, we'll slip into a short break now, but Shahina and Kush, do stay with us, and on the other side, we'll take more questions. Stay tuned.
Welcome back. You're watching Ask Profit, and we're in the midst of taking all of your questions. This next one is from DJ Rao. He's tuning in from Hyderabad and he's asking about Wellspun Living. He's bought at levels of 133. He's in the green and he's bought for the long term. The stock is currently trading at 171. He's asking about the fundamentals and whether any headwinds or tailwinds stand out. Shaina, what would you say about this particular counter?
Well, it looks like, things are looking better. In terms of profitability, actually, if you saw the last and March numbers were a bit depressing. So to that extent, the stock had corrected, but now it's again looking like an up move. I believe the textile sector should do better going forward with, China plus one kicking in. So Wellspun Living looks decent at current levels. So it's a hold.
Right. The next counter is Bank of India. Kush, this question is from Rajiv, who bought the shares at a price of 118 rupees, slightly below where it's currently trading at. It's done decently well in the last 1 year. But what's the near-term view on this one? Do you have a target also on the counter?
Well, I mean, the stock is consolidating, and it has these support and resistances intact, which is close to the 20-day moving average and the 50-day moving average. The broad range for this one at the moment is, 119 to up until 125. I think what will decide the near-term direction is, a breakout on either side. At the moment, the momentum is slightly towards the positive side. So I would suggest, you could continue to hold. On the upside, 131 and then 136 are the levels to watch for. On the downside, as I said, 119 is, the strong support zone. If that gets broken, then perhaps the stock will slip a little lower.
Okay. Moschip Technologies is the next counter that we're talking about. And this is a question from Ravi Kumar. And he's bought at levels of 85. The stock is currently trading well above that, despite the fact that it's under a little bit of pressure in trade today. He hasn't really specified a holding period, but he's asking whether he should continue to hold or sell. And since it's an imminent thing, Kush, let me come to you on this one. If you have enough of data on this, would you suggest holding on?
Alex, I would suggest holding on, but with a stop loss. The stock had again a practically vertical run, ever since April. I'm assuming that maybe a little earlier than that is when he would have entered this stock at around the 85 levels. It's had its fair share of volatility, but broadly it's actually given multiple returns already. So my suggestion is to hold on to this one, but have a very strict stop loss at this 235 level. If this gets taken out, then there's a possibility that the stock might correct further. What you're seeing in the near term isn't really as much, a sign of worry, where the stocks come off these highs of, 330 to up until 270 now. That's just the, profit taking or the consolidation that the stock is witnessing. So from a positional standpoint, 235, 240 should be your trailing stop loss now.
All right. The next question is from Kiran. They're holding two stocks, Oberoi Realty at 1800 and Larsen Toubro at 3700. Shahina, both at elevated levels. They say they're waiting for the budget. For any news related to the construction sector. Now, we're only a couple of days away from the big budget, but from a longer term perspective, for somebody who's been holding on from elevated levels, what's the long term view?
I think both the stocks look decent if you're a long-term investor. And I believe the budget is likely to give incentives both for housing, especially low-cost housing. So Oberoi should, and both even L&T should benefit from that. Also, we've seen orders, especially for L&T picking up in the Middle East. So I think on both sectors also are likely to do well, engineering, construction, real estate. So both the stocks are likely to do better going forward. So one should hold if one is holding already.
All right. Titagarh Rail, what should be said about this counter? We've got Anu from New Delhi who's bought at levels of 1787, which is unfortunately above the current market price, but this stock has seen quite a run. Should you hold on though, Kush? Because some are calling the end of a rally for these, these rail stocks. Are you one of them?
Alex, not the end, perhaps a bit of a pause, and it could be a longish pause. We've had a lot of discussion, on the channel around, a lot of these names. My view remains that a lot of these are at elevated levels. From a technical standpoint, we are seeing negative divergences also. So that suggests that, even though it's not the end, of course, for these names, you could be in for, a long waiting period if you continue to hold. So my suggestion, if it's a trading position, if it's a trading bet, as you should have a trading stop loss in your, trading bet, you should perhaps book it at the moment, exit and see, how they pan out post budget, and then perhaps, you could consider a re-entry. Most of these, rail and, in fact, if I include the defense names also, are in that territory when you should, exit at the moment, or at least have stop losses, and then perhaps consider, post the budget. So Titagarh Rail specifically is an exit, but if you do want the stop loss level, then 1590, that's the level that, you should look out for. If that gets broken, then, the stock could see further, acceleration in the downward momentum.
Kush, the next counter is Premier Explosive. The question is from Debun from Kolkata. They bought at elevated levels of 800 rupees. Now, the stock has seen a rally in the last 6 months. It's doubled in the last 6 months, but seems to be in a bit of a corrective mode now. What should somebody do since they've been holding on from 800 levels?
Well, I think it might sound like a broken record. I might sound like a broken record here, but this is how the stocks are playing out, and that's what we mean when the markets, or at least certain segments, are at an overheated, are in the overheated zone. Premier Explosives also one of them. Now, after a sharp run up, the stock is consolidating with a negative bias. Might continue to do so for a while, but then if you want to hold on for the budget play, see what comes out, then perhaps you could hold on with a very strict stop loss at 670. Otherwise, no further positions to add in this one. You could continue to hold, see if there is something around the corner, in the budget, and 670 would be your stop loss.
Okay. Last question, a quick view on this one. China, this is a question on State Bank of India. Praveen from Vijayawada is asking about this. 880. Some people are still holding on to their view that it's a buy. Are you one of them?
Yes, I'm one of them. I think it, in valuation-wise, also supports a decent uptick from here over the medium to longer term. So it's a hold.
But is it a fresh buy?
Yeah, you can buy because valuations are attractive, and it is one PSU stock that you could be invested in terms of valuations also.
Okay, fair point. Shahina, as well as Kush, thanks so much for taking the time. Pleasure having you on the program, and hopefully everything we've spoken about have benefited those people that didn't get to ask a question today as well. That brings us to the end of this particular edition of Ask Profit from Smriti and myself and the team that put the show together. Thank you so much for watching. This is NDTV Profit.
welcome. You're watching NDTV Profit. I am Mahima Vajrajani. Well, one stock that is in focus today is Asian Paints. Asian Paints came out with its Q1 FY25 results yesterday. The results have not been